Good afternoon. Thanks for joining me this afternoon for a webinar on Malta as an EU jurisdiction for banks and financial institutions, as well as funds and asset managers. I do hope you find this session to be interesting and relevant at this time. Before I kick off with the presentation, I would like to launch a poll, which this is the first of two. There'll be another poll later on during the presentation, which you should see on your screen right about now. And I would kindly ask you to complete these and vote on the four options, which are what is your greatest concern in a post-Brexit reality? Would it be the loss to the EU market or the loss of revenue from your EU client base? If it's the risk that the UK may be seen as less attractive as a financial services domicile, whether there might be a brain drain in terms of talented individuals within the industry leaving the UK, or indeed if there's any other major concern, please do comment. I'll leave the poll open for another few seconds and then close it. Very good. Thanks for that. So the resounding concern does seem to be the lack of access to the EU market, or the potential to lose the ability to service an existing EU client base. There's also some concern on the UK being seen as less attractive as a financial services jurisdiction. All right, so I'll close my webcam now and go on to the presentation. So here's a quick overview of what we'll cover over the next 30 to 40 minutes. A quick presentation on Malta as a financial services hub, Chetcuti Cauchi advocates, Malta for banks and for asset management, a quick overview of the regulation and legislation governing these areas, a brief look at Malta's corporate tax system, which is one of the lowest fiscal bases in Europe, and then a quick look at some success stories of banks and asset managers that have set up in Malta. A small island republic, Malta gained independence from the UK in 1964, following almost 200 years of British rule. Malta joined the European Union and Schengen area for border free travel in 2004 and adopted the euro as the sole currency in 2008. Prior to joining the EU, Malta overhauled its financial services legislation to offer a sound and attractive environment to establish itself as an international financial services center. Since then, Malta has managed to attract a significant level of foreign investment within a range of industries that have done well and continue to do extremely well, including maritime for both pleasure yachts and commercial vessels or fleets, aviation, fintech, financial services, of course, with a growing number of investment services providers set up on the island, including banks, e-money and online payment service providers, funds and asset managers, insurance operators and brokers, pension funds, and the supporting service providers. Malta boasts a skilled local and international workforce and an excellent pool of professional service providers at more moderate costs than are found in other EU financial services jurisdictions. There are a number of national agencies that are tasked with attracting foreign investment to Malta, and these offer a range of incentives to companies that choose to establish their base in Malta. During the past 20 years, Malta has strived to become the jurisdiction of choice for financial services businesses seeking to establish themselves in a secure and well-regulated EU domicile. Malta's financial services industry has grown thanks to the regulator's open door policy. Local practitioners may present interested businesses from abroad to conduct informal meetings so as to determine whether Malta would be the ideal jurisdiction from which to set up operations. As a quick overview of why some of these companies are attracted to Malta for financial services, companies in Malta are governed by a clear Companies Act that is founded on the UK Companies Act. So British coming to do business in Malta find a very familiar legal framework for business. Malta also adopts IFRS standards for companies, making this further consistent with the EU's accounting framework, and indeed a setup that British businesses will be familiar with. Maltese companies, including financial services operators, may choose any currency, including, of course, the pound sterling, as their reporting currency. All EU directives have been transposed into Maltese law so that any financial services firm set up on the proper license in Malta may access the entire EU marketplace. Malta's unique geographical position means that as much as we are members of the EU and identify as European, we are also a Mediterranean state and form part of regional trade organizations. For this reason, several operators have used Malta as a portal through which to tap into the Middle East and North African territories and beyond. Malta's body of financial services regulations has attracted businesses in areas as diverse as investment funds and fund administrators, also pensions, custodian service providers, listing on capital markets. Malta has a main listing stock market as well as a prospects MTF and a third institutional market, payment services and electronic money issuers, as well as credit and financial institutions. Some of the top names in Europe and indeed the world have been attracted to Malta. HSBC as a bank is here, USA Risk and Aon for insurance, amongst several others. I'll take a brief minute to talk about who we are. Chetcuti Cauchi Advocates was established some 16 years ago by a husband and wife team and has grown from strength to strength ever since. With our international headquarters in Valletta, Malta's capital city, we also have a legal office in Cyprus with rep offices in Zurich, Hong Kong, and in London at Temple Chambers. We are international not only in our geographical presence, but also in our staff complement, now counting some 200 staff between lawyers, the management team, financial services experts in different areas, as well as administrative and support staff. Chetcuti Cauchi Advocates has been at the forefront of every piece of legislation issued in Malta in our fields of practice by providing feedback from our experience in the market, participating in discussion fora, and contributing to consultation documents surrounding any new or proposed legislation. Between our partners and managers, we sit on councils or committees of the leading industry associations, including the Chamber of Advocates, STEP, the IFSP, that's a local institute for financial service practitioners, and some of us also lecture at industry events, conferences, or at educational institutions. We have advised several financial services firms through the licensing process, who now operate successfully from Malta. For several of these, we were recommended by leading law firms around the world, including London. We are a full services legal firm aimed at investors, covering both private and commercial or corporate aspects. So we assist clients with international business, international banking and wealth, property investment, transport options, as well as international tax planning, and of course, cross-border corporate planning. The cornerstone of any financial services regulation jurisdiction is, of course, the regulator. In Malta, the Malta Financial Services Authority, or MFSA, is an autonomous institution and is the sole regulator for financial service firms. While ensuring strict regulation, the MFSA is pro-business and encourages feedback from the market, so that it may ensure that laws and regulations keep up with industry evolution and provide an environment in which different businesses may flourish. The MFSA is approachable to discuss new license applications, where the promoter may present their proposed venture prior to the formal application process. Needless to say, the primary objectives of the MFSA are to ensure market stability, investor protection, as well as consumer protection. It goes without saying that any companies that wish to start operating within the financial services industry from Malta are required to first obtain proper authorization from the Malta Financial Services Authority. As a quick view of how any licensing process would go ahead, we would normally start with a preliminary discussion where the outline plan is discussed at a high level between ourselves, the applicant, and the MFSA. This allows the regulator the opportunity to get to know the promoters behind a proposed license application in Malta, as well as understanding the business plan thereof. All being well, a complete license application would be submitted. A key part here, of course, would be the due diligence exercise that is carried out on any shareholders, directors, senior management, any controlling persons, in a very similar manner to that carried out by the FCA in the UK. The MFSA would normally reach a point where it issues an in-principle approval, following which the formal license may be issued. Prior to going on to brief you on funds and asset management in Europe, I would like to launch another poll. This is the last one we've got in this webinar. So I would ask you to please vote now. Thank you. So this poll is, how can Malta best offer a post-Brexit solution for you or the firm you work with? Clarity and certainty in regulation, lower costs or taxes than the UK, a dynamic regulator that supports industry evolution, or if you have any other comments, please do comment. I'll leave the poll open for another few seconds before closing and moving forward. Okay, thank you for that. That closes the poll. So the majority here seem to look for lower costs and taxes than the UK, which I'm pleased to confirm Malta does offer, as well as clarity and certainty in regulation coming up a distant second. Over here, by virtue of Malta implementing any prevailing EU directives, this does offer the clarity and certainty in regulation. I'll now cover some parts of the fund and asset management area in Malta before going on to the banking industry. Clearly, with the anticipated impact of Brexit, several UK professionals are looking to set up some form of subsidiary or operation within the EU. Malta's fund market has grown rapidly over the years, especially over the last 2 years. There has been a steady influx of clients from the UK looking at Malta as their post-Brexit European access strategy. And of course, they enjoy the benefit of the strong legal framework provided by the Malta's pack of legislation. The starting point of funds or asset management in Malta is found in Malta's Investment Services Act, which together with complementary regulation and legislation transposes the MiFID II directive of the EU. I won't run through everything. However, on the screen, you are seeing the different categories of license that may be permitted under the Investment Services Act and the minimum share capital applying to each one. Broadly, as one goes down the list from top to bottom, the permitted activities increase, as does clearly the minimum share capital as the risk of the operator increases. Taking a closer look now at collective investment schemes, these would normally require a Category 2 license. Funds are normally set up as a CCAV, although they may also be set up with other legal formats. Fund managers may be authorized to manage either UCITS funds or AIFM funds, or of course the de minimis if the total AUM across all funds remains under 100 million euros. Those companies that go for both UCIT fund manager license as well as an alternative fund manager license are what is called the Super Manco, being able to offer both UCITS and AIFM. Malta allows funds to be set up as umbrella funds with sub-funds that may be created of the same category. An umbrella fund would need to be either UCITS or alternative funds. This is exceedingly interesting and a low-cost measure to bring funds to the market for those operators with a number of funds. We have found this appeals equally to fund managers and fund houses issuing their own funds, as well as family offices that may wish to offer a more personalized fund to their different clients. Naturally, we can provide more directed advice when we are familiar with the person's specific circumstances. Funds may also be self-managed by an investment committee within the fund structure or externally managed by a licensed fund manager. So there is a range of ways for people to set up and get started in Malta. Malta's legislation permits a wide range of different funds. The UCITS needs no introduction as the EU hallmark brand. Alternative investment funds are issued as per the EU AIFMD. There is then the Professional Investor Fund, or the PIF. This is a local fund that cannot be openly distributed, is aimed at qualifying investors, placing a minimum of 100,000 euros per investor that should be maintained at all times in nominal terms. Probably investing in crypto is not your top concern right now, but in February 2018, Malta recognized cryptocurrencies as an asset class permissible within the professional investor fund structure with a few slight tweaks and changes. There are some fact sheets for these different funds in the side panel on your screen. Please do download these. They have more details such as minimum share capital, governance factors, and so on. We will send an email tomorrow with some details of what I've covered today, as well as some brochures. There are also a couple of recognized but not licensed funds. These are usually suitable for limited pools of investors where distribution is not required. The notified AIF is essentially an AIF fund that is issued under the direct responsibility of a fund manager. So the fund manager takes full responsibility for the compliance thereof. However, several asset classes are excluded, including property. Private funds are those funds limited to less than 15 investors and with a limited investment strategy. Clearly, substance and governance must be mentioned. Any license holder would be expected to have their own dedicated premises physically in Malta, so virtual offices are not an option for licensed institutions. The key functions must take place in Malta, although many support functions may be outsourced even back to the UK, regulated by proper secondment agreements, outsourcing agreements. In terms of governance, the board of a fund would normally require a minimum of 3 people, and we recommend that at least one is based in Malta, as there is a requirement that the board is familiar with the laws and regulations and obligations incumbent upon a fund in Malta. Clearly, any application would be subject to would have the key promoters, shareholders, and controlling parties subject to a fit and proper test, which would not only check their integrity and background as well as their professional competence related specifically to the nature of the fund strategy that the fund house is launching. Funds in Malta are required to have a number of professional counterparties. There are a good competitive number of these on the island, and these cater for the different types of fund and requirements that people may have. A fund manager could be carried out, as I've mentioned, internally or by appointing a duly licensed management company in Malta or in the EU, depending on the fund type. A custodian for the assets of the fund. Administrators carry out the valuation, transfer agency, etc. This can often be provided by parties outside Malta. An auditor approved by the MFSA must be appointed to verify the reporting done, financial reporting issued by the fund. A compliance officer is required, as well as a money laundering reporting officer. In any licensed institution, the money laundering reporting officer must be an employee, director, or key official of the licensed entity, and would always retain responsibility for the compliance of the licensed firm with anti-money laundering and prevention of financial terrorism obligations. The compliance function itself may be outsourced to suitably qualified teams or individuals. However, the MLRO itself must remain within the license holder. Clearly, any license application submitted to the MFSA at this point is not going to be approved by the Brexit deadline of the end of March, should things go ahead as they seem to be. And we are able to provide some short or mid-term solutions together with some local licensed counterparties. One would be to entrust a Malta licensed manager with the management of your EU-based funds. A Malta fund manager would either appoint the UK manager as its advisor and manage the funds in accordance with the directives provided, or it may appoint the UK-based portfolio manager as the portfolio manager of the Maltese fund manager with respect to that specific fund or funds. This solution would avoid the necessity for the UK portfolio manager to relocate to Malta. There are other hosting solutions that may be provided to UK managers interested in redomiciling into Malta or using back or middle office services, for example, risk management and compliance functions. According to internal research that we have carried out on market statistics, UK managers currently manage over £1 trillion for non-UK European clients. In the event of a no-deal Brexit, a scenario that sadly seems increasingly likely, UK licensed asset managers and UK funds that are passported into the EU may no longer be able to keep on operating in the way they do today. The time has long passed for prudent fund directors to take a passive wait-and-see approach, and post-Brexit strategies now need to be identified without further delay. We're able to offer, in conjunction with a group that has a Supermanco license in Malta and also has a UK management firm licensed in London by the FCA, we can propose some of the solutions I have just run through. This would allow some UK managers to maintain their mandates with clients and allows them the time to really understand Malta and get to know what Malta is really about before committing to a more full long-term solution. That wrapped up the funds and asset management part. I will take some questions at the end of the webinar, and I will now move on to looking at Malta for banks, credit institutions, and electronic money operators. Malta's banking industry is characterized by a number of large banks that serve the local markets. The largest of these fall under the joint supervision of the MFSA as well as the direct supervision of the European Central Bank. These between them cover retail, commercial banking, private wealth, as well as custody. There is then also a range of international banks that serve global clients. Some of these do not actively target the local market, but utilize the EU passport to operate in other jurisdictions within the EU. On the more emerging technological side, Malta has a sound electronic money institution law that transposes the electronic money directive of the EU. These are increasingly popular with those offering online banks, wallet services, and issuing their own electronic money, as well as payment service providers that assist online merchants with the payment processing from card. With Malta's groundbreaking movement in the fintech sector, particularly with blockchain, there are some new distributed ledger technology options taking ground, and some banks are expected to be physically on the ground by the end of 2019. Let's have a quick look at Malta's bank licensing conditions. This is clearly a very quick overview of a long and detailed pack of legislation. Ideally, applicant banks will have a shareholder of at least 25% that is another bank already licensed in a reputable jurisdiction. There will be a full governance structure required, including both executive and non-executive directors, together with suitable committees to ensure sound and prudent management of the bank. For credit institutions, that would be what we'd consider a full bank license, including offering loans. The minimum share capital required is of €5 million as per the law. However, in practice, with clients that we've helped through the process, we find that the usual figure put up is €10 million. Needless to say, any credit institution in Malta would need to adhere to all the prevailing EU solvency capital adequacy requirements, as well as any other legislation that applies to financial institutions. And it goes without saying that all executives proposed to run a bank in Malta would be required to be established in the banking industry, holding a senior position for several years. The licensing conditions are less stringent for the electronic solutions of electronic money and payment service providers. So the different legislation in Malta permit a number of different credit institutions or financial institutions to set up, ranging from the full bank license to offering custody or sub-custody arrangements between Malta and other EU or non-EU jurisdictions, as well as the electronic institutions that have ushered into Malta an increase in non-traditional bank-related businesses. Again, many of these are set up in Malta and passport their services throughout the 30 EU and EEA countries. Any banks that are full credit institutions would be required to participate and contribute to the depositor compensation scheme, whereas electronic money financial institutions do not fall under such requirement. That wraps up the quick overview of the banking sector in Malta. I will take a couple of minutes to run you through Malta's corporate tax system. This has been in force for over 50 years and has been approved by the EU Commission and the OECD. So the structure we'd normally work with is an operating company that carries out the activity, owned by a holding company in Malta, and a shareholder that would normally be resident abroad, whether that is individuals or corporate. Now, let's take an example where the net income, operating income for a year is 100,000 euros. So the operating company would be carrying out the licensed activity. So fund manager, asset management, etc. On the 100,000 profit made, the company would pay 35% tax to the Inland Revenue Department and would distribute a dividend of, or declare a dividend of 65,000 euros to the holding company. Subject to conditions being met, which we can ensure it does, and the shareholder being non-tax resident in Malta, the tax department would refund 30% or 30,000 of the 35 paid back to the holding company. By this point, the holding company would have received a dividend of 65,000, a tax refund of 30,000, making up 95,000. That would leave a net Malta tax leak of only 5%. The full dividend of 95,000 could then be paid up externally to the shareholder outside Malta. There would be no further tax applicable at the level of the holding company, neither on receiving dividends or tax refund, nor on paying the dividends out to the shareholders, subject to minority shareholder levels being met. However, of course, the shareholder in a foreign country would need to seek local advice on how the receipt of dividend from Malta would be taxed in their country. Malta does enjoy an abundance of tax treaties to avoid double taxation with over 70 countries around the world. The benefit of using the holding company is that the dividend and the tax refund are combined in one holding company before being remitted to the shareholder, or of course held for further investment within Malta or the group. The amount paid out from the holding company would be a pure dividend, which is well recognized in international law treaties. We'll have a look now at some success stories of financial services that have set up in Malta. ARIA Capital Management is a UK group that operates internationally and has set up multiple licensed offices around the world in order to meet its clients in different jurisdictions and different territories within the world. Their European operations, an asset and fund management platform, the ARIA CCAV, is authorized and regulated by the Maltese Financial Services Authority. Starting with one fund out of Malta, ARIA CCAV now comprises several sub-funds, some of which we have helped to passport across the EU, including into the UK. The company has benefited from Malta's stable economic climate and intends to carry on launching further funds and strategies from Malta. Another of our clients is the FCM Bank. This bank has operated in Malta since 2010, specializing in a number of different corporate-oriented banking solutions as a fully licensed credit institution. We assisted the current shareholders to buy out the FCM Bank, including a reorganization of its management and governance structure. We continue to advise the bank on regulatory and compliance matters. Up on the screen now are a couple of testimonials from different clients that we have had the pleasure of assisting over recent years. And in wrapping up, I'll just quickly run through as a summary of how we can help international clients looking at Malta. We are happy to offer advice on the alternatives to set up in Malta under the different legislative regimes. We're happy to issue legal or tax memos on operating from Malta. We have often found clients who preferred to have a memo to present to the board prior to taking such a major decision. We can help clients to acquire existing license holders in Malta. I will point out here that it is still a regulatory process. The new shareholders would need to be vetted and approved by the regulator. So in some cases, it is not always quicker than setting up a new license. Clearly, we can help with the license application process, covering all the liaison with the MFSA, introductions to all the local service providers necessary, along with the other work required, such as corporate services, as well as commercial, employment, data privacy, and immigration law. For license applications, the only part that we do need to outsource is preparation of financial projections, as these do need to be signed off by an external and unrelated CPA. We could also assist in other areas by introducing licensed counterparties, property search and selection, recruitment, work permits, and other personal immigration. It is worth mentioning as a final point that Malta, in order to offer security and peace of mind to with whom Malta has had a long and healthy relationship, those Maltese in Malta will enjoy an automatic 10-year visa extension as opposed to the normal 5 years. And British looking to come to Malta to work will be welcomed with open arms. Malta also offers a residency program for highly qualified individuals, which could reduce personal income tax to as low as 15%. These are all areas that we would be very happy to advise on. That brings to an end my presentation. Thank you very much for joining me today. The the webinar screen will allow you to write in any questions that you have, which I'm happy to take right now. Thank you. I've had one question on, we have assisted international clients before. Clearly, yes, we have. We've assisted several license holders to either to obtain their license, to acquire new license, along with other more complex transactions, such as the result of a merger and acquisition at group level that would impact two companies in Malta or one company in Malta and another abroad. So we're able to help with the full services. Please do continue writing in any questions you may have. I've had one question on to provide further detail on governance structures. There is no one-size-fits-all answer. Clearly here I'm trying to cover a different range of possible licensed entities. Banks, for example, would require a larger board. Again, there's no fixed size. However, it would depend on the nature and size of the operations of the bank. The regulator would need to be assured and satisfied that the license holder can effectively carry out the activity it is licensed to do. With smaller license holders such as funds, asset managers, EMIs or PSPs, again, the board could be smaller, but there would need to be a clear emphasis on the competence of the in running the firm. Another question I've had is whether some functions may be outsourced locally or abroad. It's a very wide answer. Some said some operations, so the key operations would be expected to be handled in-house. Support functions can be outsourced. So Malta has a strong complement of professional service providers that we would be happy to introduce to. These include along the lines of fund administrators, compliance experts, and firms that may offer to act as compliance officer and ensure that the company remains in compliance with all prevailing regulations, together with the normal regular reporting that would be required to different authorities. Thank you very much for joining today. There's my email up on the screen, steve@cclex.com. Please don't hesitate to get in touch should you require any further information. Thank you for joining.